Good morning. I am Bernardo Del Rio, managing partner of JA Del Rio, in which our motto is helping companies do business in Latin America. We appreciate and welcome you to this webinar, the digital economy in Mexico and its impact on residents abroad. It is my pleasure to introduce Victor Ramos, tax associate of JA Del Rio, who will be co-hosting this webinar with Renata Aguilar, tax manager also at JA Del Rio. Please feel free to send us questions during this transmission. Our experts will answer them in the Q&A session at the end of this webinar. And sliding it over to Renata, please feel free to commence.
Thank you, Bernardo. Hello, everybody. Welcome to our webinar. On today's agenda, we'll be discussing about the general aspects of the Mexican tax reform, the VAT rules applicable to non-residents providing digital services, the VAT and income tax rules applicable to non-residents acting as intermediaries, and also we are going to see some cases to illustrate how these new rules operate.
Thank you, Renata. And one of the things I think that has to be mentioned first is just the size of e-commerce. E-commerce has really grown immensely. Like if we look at it, the growth has been pretty huge, from 3% of the economy to 5%. Its size is similar to sectors such as building, food, even tobacco, larger than some industries. So this makes it a very juicy target for the authorities, that I think is kind of the reason Mexico is focusing on it, and also why many other governments, which is what Renata will be explaining, have their sights set on this very, very juicy target. Can we go to the next slide, Renata?
So lots of changes going on. It appears that Mexico now has fully jumped into the OECD BEPS initiative. So before we dive into some of the specific digital economy rules for Mexican residents and non-Mexican residents operating in Mexico, let's remember that the OECD released its Action 1 final report addressing the tax challenges of the digital economy in October of 2015. The final report summarizes key features of evolving digital business models that the OECD considers relevant for the overall BEPS analysis. In addition, the final report considers that broader direct and indirect tax challenges, tax policy issues, and tax administration challenges raised by the digital economy, and evaluate the options to address those challenges. On December 2019, the Mexican tax reform was published in the Federal Official Gazette. The modifications included changes in the VAT law and also in the income tax law, which are effective as of January 1st of 2020, unless otherwise provided. And as it is the case of those rules related to digital platforms, which would be fully enforced by the beginning of July 2020. BEPS 1.0 comprises the 15 final BEPS reports published in 2015 by the OECD. As a result, many jurisdictions have started to impose unilateral tax measures to tax digital companies. However, it is believed that BEPS 1.0 did not address the tax challenges of the digitalization of the economy. Reason why in January 2019, the OECD announced that it would engage in a renewed international discussion. So BEPS 2.0 is a term used to refer to the latest OECD efforts. The current BEPS 2.0 initiative introduces measures to ensure a global minimum level of taxation, introduce new concepts and rules to address the tax challenges of the digitalization of the economy, and grant new taxing rights to the countries where users of highly digitalized business models are located. The discussions are now focused on two central pillars. One pillar addressing the broader challenges of the digitalization of the economy and focusing on the allocation of taxing rights, and a second pillar addressing remaining BEPS concerns. The purpose of this new OECD project is to consolidate unilateral efforts into a consensus position to help avoid misaligned unilateral measures and double taxation that would harm investment and economic growth. The OECD is currently working on finding a consensus-based solution to the challenges arising from the digitalization and made the commitment to deliver this solution before the end of 2020. So in this context, Mexico introduced in one shot a large number of significant BEPS measures. Action 1, addressing the tax challenges of the digital economy. Action 2, neutralize the effects of hybrid mismatch arrangements. Action 3, strengthen the CFC rules. Action 4, limit base erosion via interest deduction and other financial payments. Action 7, permanent establishment status. Action 12, mandatory disclosure rules. And Action 14, mutual agreement procedure.
Thanks, Renata. Hello, everybody. This is Victor speaking. With this being said, as a consequence of the tax reform, the foreign digital platforms providing services or selling goods into Mexico will be required to charge Mexican value-added tax on their sales and remit such tax to the Mexican tax authority. Also, foreign digital platforms intermediary between sellers and buyers of goods or services will be required to withhold VAT and income tax on the Mexican sellers and remit such tax to the SAT. For VAT purposes, the rendering of services through application or digital content over the internet or other network will be subject to a 16 tax rate. In this sense, the new VAT obligation for foreign digital platforms will be triggered for certain types of services with Mexican source. Mexican source for these purposes will exist even when there's no physical presence, but when the recipient is domiciled in Mexico, the intermediary is located in Mexico, the IP address is located in Mexico, or the registered phone number is Mexican. We will mention these new rules really affect B2C, but not B2B, as the VAT is paid by final consumers. Hence, we may sustain that we are not before a new tax, as the VAT, according to the Mexican VAT law, is mainly triggered on activities performed in Mexican territory and upon importation. So in principle, even before the Mexican tax reform, any person performing certain activities in Mexico or importing intangibles or services into Mexico should have been paying the VAT at the final consumer or importer of the service. Of course, this was never done because the tax authorities would have to enforce millions of people that maybe do not even have the access or the ability to do this. So what this reform does, it flips the obligation to the service provider or the intermediary, regardless of the tax receipts. At the beginning of the presentation, we said that not only the VAT, but also the income tax law was modified to incorporate digital economy rules. In the following slides, we are going to talk about only those services that trigger VAT obligation. In this sense, the digital services subject to VAT would be the following. In the first basket, we have included services provided such as Netflix, Amazon Prime, or Spotify, which allows the download or access to pictures, movies, text, information, video, audio, music, games, multiplayer environments, mobile ringtone, online new viewing, traffic information, and weather forecast and statistics. On a second basket, we have online clubs and dating pages such as Tinder, Bumble, or Badoo. And finally, distant learning apps such as Kahoot. So now we're going to talk about the main obligation for non-residents without Mexican permanent establishment rendering digital services. First, they need to obtain a taxpayer ID. For these purposes, there are 2 moments to file the application. Within the following 30 calendar day in which the services were rendered for the first time, or if the services were rendered on a regular basis before June the 1st, 2020, the registration should take place on June 30, 2020 at the latest. It's worth mentioning that notwithstanding the application could be initiated online, it should be completed personally at the tax authorities' offices. In this sense, the Mexican tax authorities may require additional information within the following 10 days after the application. In such case, the applicant should provide the necessary documentation in a 10-day period. Second, the company must appoint a legal representative in Mexico who will be responsible for supervising the fulfillment of tax obligation and receiving any kind of notification from the Mexican tax authority on behalf of the non-resident without Mexican permanent establishment rendering digital services. Third, it is also mandatory to have tax domicile in Mexico for notification and surveillance purposes. Fourth, calculate, collect, and remit the VAT at a 16 rate to the tax authorities. Fifth, they will be obliged to file a quarterly informative return containing the following details: number of monthly transactions with Mexican customers, number of service recipients, type of service, and price. For these purposes, the digital service provider must keep monthly records. Sixth, the company must issue electronic invoices with VAT details at the request of the user. The invoices must at least contain the name or company name of the user, the city and country in which the invoice is issued, the tax registration number of the issuer, the sales price excluding VAT, the VAT amount applicable to the service, a description of the service, the invoice issue date and the period covered by the consideration, and finally, the tax ID of the recipient. Finally, it's worth mentioning that the compliance won't create a Mexican permanent establishment. In this sense, the VAT collected should be paid through the VAT return for the provision of digital services, no later than the 17th day of the following month in which the VAT was collected. The obligation to file the quarterly VAT informative return will be considered as having been satisfied with the filing of the VAT return for the provision of digital services.
Now, we're going to talk about digital services that trigger VAT and income tax obligations. These rules apply to non-Mexican residents with or without permanent establishment that operates as intermediaries connecting providers of goods or services with buyers in Mexico over the internet. So the tax obligations for non-residents acting as intermediaries are the following. They have to obtain a Mexican tax ID as a withholding agent. They must publish prices and VAT separately on goods or service offered through their platforms. Also, calculate, withhold, and remit the VAT to the tax authorities. The withholding amount would be of 8% of the VAT effectively collected, or 16% if the individuals do not provide their Mexican tax ID. The intermediaries must issue electronic invoices supporting the withholding and payment information. As a transitional measure, intermediaries will be allowed in 2020 to issue PDF version invoices, including at least the following information: the name of the issuer, the city and country in which the invoice is issued, the tax ID of the issuer, the sales price excluding VAT, because the VAT should be expressed separately, a description of the service, the invoice issue date, and the period covered by the consideration paid by the customer, the bank account number in which the consideration is deposited, the amount of the income tax withheld, and also the amount of the withholding VAT. Additionally, intermediaries should provide the tax authorities with information about their customers, whether individuals or legal entities, even if they do not collect the VAT. So, this monthly VAT informative return of customers should contain the following information: name, tax ID, population registration number, tax domicile, financial institution name, and the bank account number in which the consideration was deposited, the amount of transactions, and regarding lodging services, the domicile of the rental property. The VAT withheld should be paid through the VAT withholdings returns for technological platforms no later than the 17th day of the following month in which the withholding is made. And the VAT informative return containing this information about customers who sells goods, provides services, or grants the temporary use or enjoyment of goods, even if the intermediary did not collect the price and the VAT, should be filed through the informative return of digital intermediation services between third parties, no later than the 10th day of the following month to which the information corresponds. So the non-residents operating as intermediaries will have the option to calculate income tax withholding on a daily basis. And this withholding should be paid through the income tax withholding return for technological platforms no later than the 17 days of the following month in which the withholding is made. The non-Mexican residents with permanent establishment in Mexico that operates as intermediaries will be obliged to withhold the income tax derived by Mexican individuals from the sale of goods or rendering services through internet, technological platforms, applications, or equivalent. The Mexican income tax law provides for progressive withholding rates, so from 8% for private transportation services and delivery of goods, from 2 to 10% for lodging services, and from 0.4 to 5.4 for the sale of goods or rendering of services. If the individuals do not provide a Mexican tax ID, then the withholding rate would be of 20%. And these rules are effective as of June 1st, 2020.
Thanks, Renata. Before we move to the next section, we want you to invite you to send your questions to the platform, which will be attending at the end of the session. So now we're going to analyze the most common business scenario. In our first case, we have a typical B2C model, which may be represented by download services, online clubs, and dating pages, or distance learning, in which a Mexican-based customer receives a service from a digital platform located abroad. In this case, as you may see, the Mexican-based customer will pay to the digital platform the price of the service plus the VAT, and the digital platform will pay the VAT, the VAT to the Mexican tax authority. This is the most straightforward scenario. In our second case, we have a C2c business model, which may be represented by lodging services through digital platforms, in which a Mexican-based customer uses a foreign-based digital platform in order to book an apartment or lodging service owned by a foreign resident. In this case, the Mexican-based customer will pay to the digital platform the price of the service plus the VAT, and the digital platform withhold and pay the VAT on behalf of the foreign resident to the Mexican tax authorities. Now we have a similar case with the difference that the apartment is owned by a Mexican individual. As you may see in this case, the Mexican-based customer will be paying to the digital platform the price of the service plus the VAT, and the digital platform will withhold and pay the applicable VAT plus the income tax on behalf of the Mexican resident to the tax authorities. Now we are going to analyze a C2C business model, which may be represented by intangible sales through digital platforms. As you may see, in this case, we have a Mexican customer which uses a foreign-based digital platform in order to download an app. In this case, the Mexican-based customer will be paying to the digital platform the price of the app plus the VAT, and the digital platform will withhold and pay the VAT on behalf of the foreign software developer with no permanent establishment in Mexico to the Mexican tax authorities.
So now let's see a purely domestic scenario where the customer and the software developer is located in Mexico. So the customer is going to pay the price plus the VAT to the digital platform. The digital platform is going to pay the software developer the price minus the VAT withholding minus the income tax, and also is going to have the obligation to issue an invoice supporting the withholdings. The platform is going to pay to the tax authorities the VAT, and the software developer is going to pay also VAT and income tax to the tax authorities, and is going to have the obligation to issue a tax invoice for the customer to support the purchase of the application. Now let's go to an example where we have the sale of tangible goods through digital platforms in Mexican territory. So here we have a Mexican customer, we have the digital platform abroad, and also we have a seller that is abroad. So here the Mexican customer is going to pay the digital platform the price plus the VAT. The digital platform is going to remit the such amount to the seller, is going to pay the VAT to the tax authorities, and the seller is gonna deliver the goods to the Mexican customer. Now, so in this example, we assume that the volume of the goods to be delivered is really low. So in another scenario, we have same exact case, a customer in Mexico, a seller abroad, the platform abroad, but the difference is that the volume of merchandises is high. So here the seller needs to import the merchandises into Mexico, have a warehouse to keep those merchandises. So here we have a first moment where the VAT triggered. So we have a 16% VAT upon the import of goods, and then when the seller delivers the goods to the customer, we have another 16% VAT upon the delivery.
And Renata, let me just jump in here. I think it's going to be one of our main cases where it becomes an issue, and I don't know if we address this a bit later on in the presentation, just the added cost that can build up for a seller, because in essence you have two value-added tax of 16% on the same operation. So if something costs you $100 in the US, and that same thing you're looking at paying into or selling into Mexico, that product can be $132 in this simplified scenario. So you might not really be losing money, but you're probably losing market share. Like you could sell more if you had that presence in Mexico to be able to clear customs.
Yeah,
would you
that's
agree?
right. Yes, totally. So the customer at the very end, the VAT upon the import is not going to be credited, and then we have this additional VAT upon sale. So the customer is going to pay, obviously the sales price is going to be higher for the customer. So probably the seller is going to be less competitive.
Correct.
We have another scenario here where everything, like another purely domestic scenario, where the customer is in Mexico, the merchandises are in Mexico, the seller is in Mexico as well. Only the platform is abroad. So the customer is going to pay the price plus the VAT to the platform. The platform is going to pay the seller the price minus the VAT withholdings, minus the income tax withholdings, and it's going to have to issue a tax invoice to support such withholding. Then the seller is going to deliver the customer the goods, and here we have the VAT, the 16% VAT, because it is a domestic transaction. And then this seller also is going to have to issue a tax invoice to the customer if he wants to support this purchase. And the seller is going to have to pay the tax authorities, the VAT, and also the income tax. So the digital platform in this scenario is also remitting the VAT to the tax authorities, because remember that the withholding could be of either 8% or 16%. So assuming here that the digital platform only withheld 8% VAT, then the seller is going to have to pay the tax authorities the remaining 8%, as well as the withholding as the income tax for performing these entrepreneurial activities in Mexican territory. So would you like to add something else here, Bernardo?
No, on this one, I think that this is easier in the sense that everything's domestic, so there really isn't untaken VAT. So like people would be getting their value out of tax. The issue comes when foreign for Mexico suppliers try to sell into Mexico. There comes a point where it can be a competitiveness issue. That would be what I would say.
Yeah, okay.
Thanks, Bernardo. Thanks, Renata. Definitely, this is a very interesting topic, and it should be analyzed case by case depending on every business model. We'll start now with the Q&A question. If by the end of this vlog there are questions to answer, we'll contact you as soon as possible with the answers.
So please, if you have any doubt or concern, please write it through our chat, and we'll be happy to answer to your questions.
Okay, I'm looking at one of the first questions. I think, I don't know who this would be for. It's, if I'm a foreign entity, should I need to be physically in Mexico in order to obtain my tax registration? Who wants to take that one?
I take it. Well, not necessarily. Like in most of the cases, you can appoint a legal representative to process the registry before the tax authorities. So, but please bear in mind that the application could be initiated online, but should be completed personally at the tax authority's office only by prior appointment. I mean, like, and more with this COVID scenario, you cannot just show up at the tax authorities and require like a certain services. You need an appointment, and right now that's kind of difficult to get because they have decreased the level of attention to avoid like lots of people being like at the same time in the same place.
Okay, very, very interesting. Here's another one. If the tax authorities, like what would be the motivating factor for a company to comply with all these different rules if they're kind of under the radar? And if you want, I'll take this one, Renata. Well, one of the issues that we're looking at is, like, obviously the government has that 5% of GDP pretty much pegged and knows the big companies, the Ubers, the Airbnbs, or the Rappies, and all these big e-commerce companies, Amazon. And for smaller companies selling into Mexico, where they can be kind of on the line of, well, what is the cost of my compliance versus the risks and everything? One of the issues that we've seen with some US advisors is just the potential due diligence risks when they look to raise fresh capital and their new investors are looking around, well, have you been compliant with all these different items? And so you really don't want to be in non-compliance, even if the amounts are small. If they could create a big headache down the road, that could even make financing a bit more complicated. So I think that's going to be one of the major takeaways here. Let me see another one. Which are the withholding obligations for a foreign company acting as intermediary? Who wants to take that one?
I take this one, Bernardo. Thanks. As we said, for VAT purposes, the platform should withhold either the 8% or the 16%. On the other hand, income tax withholding only applies when Mexican individuals are the sellers.
Okay. The next one we have, in the case of a household that sells product to a foreign customer through a foreign digital platform, what would be the VAT and income tax consequences?
I take this one, but this would be like, this is also like really interesting because this is another scenario where this Mexican individual is selling abroad, no? Meaning that we are before an expert of services. So the expert of services for Mexican tax purposes is taxed at a 0% VAT rate. So the withholding income tax obligation would remain because this individual is going to have to pay income tax over that sale, but the VAT is going to be at a 0% rate.
Okay. What is the basis for the withholding? The amount received before or after the commission charged by the platform?
This is a very interesting question, actually. We take a look on the authority's webpage, and what they state is that the withholding should be calculated over the gross amount. This is before platform commission.
Okay.
Yes, so at the very end, the person who is selling or rendering a service through a platform is going to see the income reduced by the commission of the platform, and also like for the income tax, because remember that the VAT is going to be like a plus 16 minus 16. So there would be no like an effect, like a negative effect on the income of the seller or the person who's rendering the service through the digital platform.
Okay. And one thing I think to keep in mind in all of this is just to remember to coordinate with your foreign, if it's a US company, for example, with your US tax advisors, because for some small operations, I mean, if you're doing $50,000, $100,000, $200,000 of sales, depending on which bucket, what type of services we're talking about, a withholding is not necessarily a bad outcome if it negates any formal obligations that you have to enter, as long as you can take the tax credit in the US against your foreign source income. So I think that is also something to take in mind. What would be the tax consequence in the case the customer pays directly to the seller? Who wants to get that one?
I can answer that one, Bernardo, thanks. Well, in this case, the seller would be responsible of the calculation and payment of the income tax and VAT, as there's no withholding.
Okay.
Yeah, so but here is very important to consider that even if the intermediary is not collecting the VAT and the price, is the obligation to inform the tax authorities about that transaction remains. So that's like an important thing to keep in mind.
That's right. Okay. And there been any, who should issue the invoice and to whom?
Okay, well, here in the first scenario where we have to see this business to customer transaction, the platform is going to issue directly the invoice to the customer. So this is like the streaming, that what we say, like the learning services and such things. But at the second, in the other scenario where we have a seller, a buyer, and a platform, the platform is going to issue the seller an invoice supporting the withholding amount, the VAT withholding amount, and also the income tax withheld amount. And on the other hand, this seller is going to have the obligation to issue a tax invoice to the buyer or the person who is receiving the service or the person who is renting this property through the platform. So like it depends. So in the first one, if there's only one invoice, to customer scenario, we have only one invoice. On the other one, where we have the three parties, seller, buyer, and intermediary, there are two invoices.
Okay. The next question I have is, how has the Mexican public received getting their Netflix bill increased right in the middle of a pandemic? Renata, how do you feel about your Netflix bill going up right now?
I don't like it. I mean, like, obviously I'm paying 16% more for that, but on the other hand, we know that those services should have been paying taxes even before the Mexican tax reform. So this is not a new tax. We're not before a new tax, a new rate. So the only thing that the tax authorities are doing is trying to collect the VAT on a transaction that is carried out here in Mexico. I'm like, I don't like it, and like, I mean, among my close friends or our colleagues, and there's like a lot of resistance on this. But I would say that like in the past, we should have been paying these taxes. And also that this led me to the other thing. What happens if the platform that I'm paying this service has not a tax ID or is not registered before the tax authorities? So in this scenario, I would be like me, Renata, I would have to be paying this VAT. So like if I'm not paying his VAT to the platform, then I would have to.
And no one's going to do that. Like no one would ever do that.
No one ever is gonna ever do that. But well,
Maybe you, because you're very patriotic. You might actually do it.
I might actually do it, but yeah, no, like no one is gonna do that because like you're gonna have to pay your own 16% to the tax authorities, file a return, and
Self-assess, basically.
you're exactly.
On your Netflix bill if they didn't charge it, or any digital service that they didn't do. So it becomes more of a withholding regime and getting you there. Now, one of the things that I've heard, Renata, and maybe you can amplify on this, is that there aren't many that due to this whole COVID situation, getting a foreign company registered for the tax ID has not been easy, that there have been some hang-ups. Can you speak to that?
Yeah, I mean, like right now it's really difficult to get an appointment to go to the tax authorities and, for example, obtain a tax ID. So what we're seeing here is that we are on a trial period. Even when all these rules right now are enforced, what we see is that probably tax authorities are gonna provide like an extension or some facilities because this COVID situation has really complicated how to actually comply with these obligations. I mean, like, it is not that I don't wanna, like, let's think that it is not that I don't wanna go and register to obtain a tax ID. It's just that there are not appointments. I'm like, I can initiate the procedure online, but I have to go there and finish, and I have to appoint my legal representative, and I have to appoint also like a tax domicile in Mexico, and I must obtain an electronic signature. So for all these things, I have to go to tax authority's office, and there are no appointments right now. Like if in the past they gave the tax authorities release like 10 appointments, probably now they are releasing 4.
Yeah.
So it's been really complicated to get an appointment.
Yeah, and also, sorry, Renata, I will add all the challenges related to reporting. As we mentioned during this webinar, the digital platform are obliged to show to the Mexican tax authorities reports of all the transactions and the taxes that have been withheld to the customer. So it is said that these 6 months were occupied to modify this technology or to change this technology for reporting. But yeah, this is also a challenge.
And I've heard that you need for Form 6166 to prove tax residence, for example, for a U.S. taxpayer. But getting that Form 6166 in the U.S. with the whole COVID lockdown is near on impossible. So that kind of leaves you in a catch-22 of, well, I can't register. So if I can't register, but I'm obligated to pay a tax starting June 1st, 2020, would you recommend start charging the tax and then once you're able to register, kind of amend your taxes or file backwards taxes with updating late fees or whatever, rather than not charging the client? Because once you haven't charged the client, then the VAT becomes a cost. Would you agree?
Yeah, and I think it's an economic rule that when if you are willing to assume that cost, I guess the company or most of the companies won't be taking this position. So even though they don't have all the necessary aspects to be registered, my take on this is that they will be charging the final customers.
Yeah, that's probably a good idea to get to it. And of course, any questions that anyone has, we can always help and see what the particular situation is. I think that's the end of the questions that we have here and the time that we have. But Renata, do you want to lead us out?
Yes. We have reached the end of the webinar. NJ, the real helping companies, the business in Latin America, appreciates your interest and your disposal. Like, if you have any further questions or queries on this subject, please send it to contacto@jdelrio.com. Thank you all.
Thank you. Have a great day. Thanks.